morning, everybody. Happy Thursday. It's March 26, 2026. Great to be with all of you today. My name is Bob Lang, and it's time for Daily Bites. Let's do a brief one here before the market opens. As you can see, down pretty sharply today, losing all of yesterday's gains and then some. We're coming back down on the S&P futures, testing the 6,600 level. Have broken a little bit below that. As far as the S&P 500 is concerned, you know, there's a big differential between the futures and the cash. The cash closed yesterday at about 65.90. If we open up here at this level where we're down about 60 handles, we're going to open up at around 65.30 or so. Don't forget, on Monday morning, Sunday night, Monday morning, we ended up testing some much lower levels on the S&P futures before that big reversal happened at about 4 o'clock in the morning, West Coast time. So I don't know if we're going to go back completely all the way down there. It's very possible. Of course, you know, that print on the ES futures didn't affect the print that was on the S&P 500, of course, right? So that means that there is a big differential, big separation over there. We don't normally go back and test lower levels or higher levels for that matter when we have big giant moves up or down. So in this case, testing those lower levels on the S&P 500 futures just below 6,500. So we'd have a ways to go to get there from here, another 100 handles or so, but certainly in the cards over the next coming days. Look, market is telling you that things are dangerous right now. If you're getting involved in a big way, you're gonna get flopped around, and more likely you're going to lose more often than you win. It's a dangerous environment to be trading heavy. If you're trading small, great. If you're taking small profits along the way, even better. Keeping that protection on. There's a lot of people who not in the chat room, but other people out there who were roasting me yesterday for having puts on. I'm like, well, you know what? I always have puts on. Always have puts on. It's just a necessity of trading. I learned a long time ago when I didn't have any protection on and I felt like I didn't need it. It was the absolute time that I did need it. So keep some puts handy, even if it's a small amount. Remember, the markets go down faster than they go up. So what ends up happening is those puts tend to get very rich in value in a short period of time. It doesn't take long for those puts to get some value, even in this high volatility environment. Now, speaking of volatility, the VIX up to about 27% right now. Looks like it's been just making its way higher. Let's take a look at that chart together, and you can see what I'm talking about. Here's the S&P 500 chart. Let me touch on this real quick first. Look, we're below the 200-day moving average. We've been there below the 200-day moving average for the past 5 days. Nothing good happens under the 200-day moving average. Remember that. Here's the VIX, and you can see it's been in a steady uptrend since the end of December, since around 15, about 13%. Now we're steady about 27%. This is very different than what we've seen in the past, right? What we normally see is these big giant spikes and come right back down. Big spikes and come back down. We have steady trending volatility here. The 200-day moving average has just started to move up. Okay, so this is the black line over here. The 50-day moving average is acting as support. The 20-day moving average is also in the mix over here, acting as support. So this tells you that people continue to buy protection, and continue to buy volatility instruments, whether it's puts or whether it's selling calls, or shorting stocks or shorting the indices. They're being defensive right now, and so you have to do the same thing. All right. There was some talk out there about lots of different patterns that are going on. I got into a wide discussion or argument with the guy who's quote unquote forecasting and predicting that the this wide breadth thrust is going to happen in 10 days, 11 days, whatever the signal is, right? And you don't. The thing is that you don't forecast these things. And I bring this guy up. I'm not even going to say his name, okay? But I bring this guy up because he's dangerous to you, right? Because every condition, every situation that we end up within the markets is different than every past one. Maybe similar, You know, nothing is similar, but everything rhymes, right? But every condition is different. And if somebody really believes they know exactly what is going to happen and they're forecasting what's going to happen, well, we hear people say that with a lot of confidence, and we start listening to them and saying, oh, well, hey, maybe he knows. Maybe I could follow him and get in behind him because he knows something. No, he doesn't know something. He's guessing. He doesn't know any more than you do. So what I'm gonna caution all you guys to just be careful of who you're listening to and who you're watching out there. You know, I try to keep it real. I try to I make bad judgment calls like all of you do. I make bad trades. I make good trades. You know, everything everything under the sun, right? And I share it with you. But I'm not out there trying to predict where markets are going to go. I'm just trying to survive one day to the next, make a little bit of money here, lose a little bit less money there, and move on to the next day, right? That's what we're trying to do. That's the goal we're trying to accomplish over here. We're not trying to get in front of a taco trade or whatever. I mean, a lot of people read about that and they start salivating. They start saying to themselves, boy, I'm gonna get on that next taco trade because that was a big winner. You don't do that, right? You react and you respond to what's going on. You don't get in front of the markets and try and predict things because more often than not, you're going to lose. Like this guy who's predicting his wide breadth thrust is going to happen. It's nonsense. It's complete nonsense. And, you know, I feel bad. I feel sorry who are following this guy because they're going to go down they're following the Pied Piper down the sewer. So anyway, that's enough of that. So let's get back to the markets over here. Again, looks bad, right? It looks really bad. It's been bending down. We're down close to, 4.5%, 5%, 6% almost. And some people will say, oh, well, that's just a garden variety correction. And it can get worse. And I'm thinking that we're going to get down to about the 6,100 level. That'd be another 7-8% down from here before things really start to kind of get interesting. And interest rates are on the rise. We've seen a big yield climb in the U.S. Treasury 10-year this morning, also in the German Bund yields. We're seeing interest rates rising because inflation is rearing its ugly head. Cleveland Fed came out with inflation forecast. Let me show you that one. There's the inflation nowcast here from Cleveland Fed. And you can see over here, they're forecasting higher inflation in March, right? CPI 3.16%. And look down over here. Okay, this is what concerns probably a lot of economists out there. Concerns Fed and me as well. People who are watching inflation. This is rising inflation over here, right? Now, I don't care what anybody else is. I'm going to go with the data from the Federal Reserve. Okay, they get good hard data. It's pretty accurate. So yeah, PCE 3.82%. That's going in the wrong direction. So no wonder when we see the Fed watch. See, even rate hikes are being priced in. Meeting is April. And look at that, 6% chance of a rate hike. This is a hike over here. This is rate cuts completely off the table. All right. And then you go out to December, forecasting about a 70%, 61% chance of keeping that. 30-something% chance of a 37% chance of a rate hike in 2026. 30% chance of a rate hike, 37%, 3% chance of a cut. So cuts completely off the table, rate hikes back on the table, and we heard that last week, Chair Powell and committee anyway. So these are tough times right now. The markets are probably not going to do well in 2026 under these conditions, right? Higher oil prices, higher inflation, slowing demand perhaps later on this year. We have good, strong demand right now, a slowing jobs market. So it all lines up to some difficult times. in 2026. So you've got to have your protection on. And again, market volatility is spiking here, and it may go even higher than where we're at right now. So listen, I mean, if you know the name on this chart, okay, think about it this way. If you didn't know the name on the chart, if I blotted out the name, wouldn't you say that this is a nice bullish uptrend? Of course you would. The VIX is not usually in a nice long uptrend, but in this particular case, from the end of December to now, it is. It's in a nice bullish uptrend here. And when do you short this thing? Well, until when it ends. Do we know when it ends? No, we don't. You get my point, right? All right, so that's going to be it. Have a great day. I'm back. I'm still in California. I'll be back home in Boston Saturday morning, and back with the regular daily bites on Monday. Appreciate all of you spending a little bit of time with me. Good luck out there. Be safe. Be cautious. Keep your puts on. Raise some cash. Sell some names that you don't need to hold any longer. Yada yada yada. So let's be safe out there, and I'll see you guys all on Saturday morning. Take care. Bye.